This is what's driving the market more than anything. Hey everybody, hope you had a great trading day. So there's a bunch that I really want to go over, but I want to focus on 5 key names. I want to go over Spotify and their investor day because that was very interesting, and what's going on with some of the Chinese headquartered names. At the end, I want to do the indexes, especially what is driving them down at the end of today, because it's really important for you to understand what the motivation is. But this is typical trading sideways basing behavior. Don't think of it as anything more than that. Now, what we're seeing is we're just seeing some of these support and resistance levels that have been here for a long period of time tested. So for example, you can see this line right in here, this 729, 730 line, and how from over a year ago, we just are sitting in here. Now, if you go back and just drill down into your volume by price, you're going to see this level right in here, and you're going to see point of control from your volume by price is sitting right there. Point of control is where people own the majority of the stock at one specific price. It's very different than VWAP, but it's definitely worth paying attention to. So this is a very concentrated area versus more than just VWAP, which is a volume weighted area, right? But different. So what we're doing is we're having this competition right in here, and you can see that the competition just keeps knocking us down. Now that's not a reason to sell, but what you need to do is you need to overlay multiple time frames to look at what's going on here. When you have spots like these where you have this little wick that's sticking up, right? That just gives us what we're going to refer to as a top or the tail, really kind of a shooting star. But as you're coming down here, just come across, see what happens. Why? Because this is the point where somebody said, I'm going to sell everything that I possibly can right here and see who's going to win. Now, who won there? The seller won, right? That's why that point exists. If people kept buying, that seller would have dried up and the stock would have gone up. I say seller, but it could obviously have been sellers. We don't know how many. But what that does is it gives us a guide. Here was the guide. So we're building this beautiful flag. We know the RSI is a little overbought here, right? A lot overbought. So we know we're in jeopardy right here. Watch that RSI video. I'm going to link at the end. I'm going to keep posting it ad nauseum until everyone becomes a master at it. So you see how you broke down on the flag? That was it. And you broke right with that level, which is a sell signal. So that was a great spot to actually get in here and short this if you wanted to, or you could have just known to get out of the long, and then you just trade it down and you're using these levels. But you're going to continue to see battlegrounds at these levels. We can put in the moving averages. The one thing that I'm going to say that I would start paying attention to, and I'm starting to see this happen more and more, and I want to just drill into this here. So you see these 3 levels right here? See how they're all converging? Okay. What starts happening when these start converging is they start losing their luster. In other words, they're great for trend markets, but when you're in a trendless market like this, okay, moving averages, besides being a lagging indicator, start losing a lot of their value. If you start going sideways, the moving average is just going to keep getting you whacked around, and that's why people that don't have other skill sets or use other indicators have a really hard time with that. So just kind of keep that in mind. I know we spent a lot of time on that one, but it's really important to understand because this is what's driving the market right now, okay? We're all sitting there, we're watching these names, and we're kind of figuring it out as we're going along here, right? Because we don't know. We don't know if we're going to roll again. I will talk about that. NIO should be on your list tomorrow. So I tried to short this today. It didn't really work very well. Lost about 20 cents on the whole trade. Let me clean up all these annotations. And what I just want to focus on is just give you some key levels to watch tomorrow. Earnings are going to be earnings. They're going to come out tomorrow night, but just watch this level right in here. That's not where I want to be. Bear with me. I want to be right here, which is the 1821 level. So we're going to want to watch that level right there. And then when you want to see is just how you flip up, but just pay attention to these levels tomorrow and see how the stock acts. $24, you're going to want to watch that. And I'm just going to give you constant levels here. And you want to have an idea of where you are with the 50-day and that you're above the 50-day going into this. And obviously you're going to be above the 5, you're going to be above the 21, you're going to be above the, you see where I'm going with this? Now look at the difference between what's going on here and how these are all starting to point up versus what I was just showing with Tesla. You have to see what earnings are tomorrow. I'm not a fan of these companies. People know that. They've been following me for some time, but a trade's a trade. So this could have some type of short squeeze tomorrow, or somehow have a good quarter or show a good quarter and move back up. But watch that 24 level. You want to see the earnings and then make a decision from there. So one of the rumors that we're hearing that Roku has the ability to be acquired by Netflix. Now, I don't believe it. I think it would be a really bad decision for Netflix if they do something like this. And the reason for that is because of their stock price. If I was a long-term shareholder and I was down 70% in my stock and then you want to use my stock as currency to buy something, I'm going to have a real problem with that. So I would expect this to be an absolute nothing burger. And just watch a couple really key levels here. Usually when we hear of these, they're not accurate. But just watch these levels. Watch to see if you make that higher high tomorrow. If you do, the short interest will obviously squeeze the name up. But other than that, you're pretty much in a kill zone here. If you can't get over this, you're just going to start rolling back down, and those people that bought it are going to get trapped. So just watch it. This could go either way, long or short, but the trade's not going to go away. You might even see buying Friday at the close in this name. That's why it's important to keep looking at these names, but you might see buying Friday into the close on this. So keep that in mind. Why? Because they think deals get done over the weekend. Sometimes they do, sometimes they don't. But I don't think this is going to get done. That's my personal opinion. People saying, oh, they're doing it for ad revenue. Okay. I mean, that's not why I have Netflix for ad revenue. I have Netflix for their content. So maybe they should go back and focus on that. And maybe the stock wouldn't be down 70 or 80% from where it is. So you're at 72% from the peak. So not the time to be using my stock as currency to go out and pick up a company such as this that is now losing money after making money. Not really the company to buy. So again, I'm not buying it. Just keep this in mind and keep these levels that I drew right there in mind. Now, Baba, no love lost here on these kinds of names, but this was something we did in the trading room where we went long. And I just want to kind of walk through the next level, which is actually right here. So it's not a coincidence that this peak right here, and then that's where you close. That's not really a coincidence, right? So you can see that level right there. Wicks are what? Price rejection. Look where we closed. Look where that wick just happens to be sticking out. Flip that tomorrow, and the short sellers are going to keep getting squeezed. The trade today, I'll just walk through it because of the comments. I get asked to walk through trades sometimes so people could learn. I'll just walk through it really quickly. So this is where we bought it based upon a pattern. We watch the pattern, we watch it play out early in the morning, make sure it was going to hold, puts in a low, and then when we broke right here, put the trade on and then quantified our risk at $1.35. It was actually $1.25, and then we just let it trade itself up at the high. We were at what? 11 times risk versus reward at the high. I wasn't in there for the whole time. I wound up blowing out a bunch of it, if not all. Well, actually, I was out of all of it by the time we were here, and then we reverted back down. But that was still a good day for me. I mean, I was happy with the trade. I don't need every dollar. And people that are telling you they're getting every dollar, they're just not being honest. But I'll take that. I mean, there's no reason not to, right? Now, the question is, okay, what do we do now? Well, now you need it to keep going. If I was short this, I would not be having a good evening. I would not be sleeping well. Let me put it that way. So if I came in tomorrow and this thing's up again in a market that's sold off, I'm not going to have a good day. I'm going to get out of the way and go from there. So just watch that higher high tomorrow, because there are levels to this. No matter how I feel about the company and the reporting, 136 3/4 is very doable on something like this if it squeezes. Now, Spotify, I wanted to save. I just want to focus on this chart so that you can see this. See this line right here? I can put in all the moving averages I want. The bottom line is your basing in here, right? So now you're at the top end of the base. Here's the bottom end of the base, and we're bouncing around. The RSI is pointing over 50. Watch that RSI video. But what really transpired today, and why I think this is important, is we could flip this level. And if we flip this level, okay, we're heading to something like this. Let me pull this down a little bit. You're heading back to 159, 160. So this is very pivotal. Now, again, you're basing, so I really don't care that the 50 is right there, but it's nice to know, right? The 10, you know you're going to be above it. The 5, you know you're going to be above. And you can see where the 21's coming in and how it's curling up. So everything is firing in all cylinders here, but we're basing, so I don't weight the moving averages as much. But I do think that we could get up to this level if we flip the resistance that has clearly been resistance. Now, I just want to go through some of the highlights because I think this was really impressive. 89% of Spotify Premium subscribers use Spotify on multiple platforms, which is up, okay? Their churn rate declined 40% over 40 years, right? So there's some really solid things that are going on at this company, okay? 85% retention rate from existing customers, and they're on track to have 1 billion listeners. So there's, again, I can't stress this enough, there's a lot going on here. They've got huge in the Latin American market with 100 million users right now, and they're on track to hit 1 billion users globally by 2030. Okay, they are staggering numbers that no other social media platform comes even close to having that amount of paid subscribers. If you look at their paid subscriber growth, nobody's even close to it. 83% of platform streams come from artists using Spotify's creator tools at least monthly. So when you start looking at this and you start seeing all the little additions, right? Here's a great addition. Concert ticket integrations has generated $300 million from the music industry. And I'm staying a little longer on this video for a couple reasons. I still want to do the indexes. Stay with me. Okay, 4 million podcasts, up from 500,000. Okay, they want to get into the audiobook market, and I think this is very interesting. But if their gross margins on podcasts are 40-50%, they think the audiobook market is 40%. They're at 28% gross margins. Just to put this in perspective, if they're to do what they say they're going to do on the revenue front, it puts them in the realm of Facebook, puts them in the realm of Google, those kinds of companies, Amazon, Apple, and I think they could be there. This is from TechCrunch. Just go to techcrunch.com and you can read the entire article. It's worth. Now, what's driving this market? This is what's driving the market more than anything. You are in a trading range. You were trying to figure out what we're going to do. Tomorrow is jobless claims. Friday is CPI. If CPI does not come in drastically, it's going to be an issue. Okay, so we're going to have to see a real decline in CPI, and they're going to go through CPI line by line. Until then, we might just go sideways. I think if we were going to break, we would have done it yesterday. It was an excellent day to do it, right? Great day to do it, right on the target news, and that's not what happened. So keep that in mind and look at how you're just staying in that range. I want to point this out. 415 is just this stock's nemesis. You're forming a little wedge line right here, but 415, just watch it. We do not seem to be able to get through that level. IWM came in the worst, which is not surprising because this is what's driving the entire market. The 10-year Treasury note, we're getting above that 301. This needs to roll back and get under 3%. The longer this stays up here, the more we're going to see a decline, or we're certainly, at best, we're not going to see a rise in pricing. That's it. Any questions, please comment below, subscribe to the channel, and please like this video. It helps me get in front of more people and supports it. If you're interested in exact entries and exits, consider joining the trading room while it's open. There's a preview to it right here in the top right, and there's a link in description as well. That's it, everybody. Trade to win tomorrow.